afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. Markets are set to snap a three-day gaining streak. The Nifty trades around the 10,650 mark. Banking stocks lead the declines, while auto stocks lend some support in trade. Manpasand Beverages trades lower for the second day in a row after the company's auditors resigned, citing non-disclosure of information. Vedanta is among the top losers on the Nifty after the Tamil Nadu government orders permanent shutdown of its copper plant. And the Indian Met Department confirms the onset of monsoon over the state of Kerala.
Well, that should be heartening, but I'll tell you what, viewers, thanks for tuning in to Countdown. My name is Neeraj Shah. The markets aren't exactly gung-ho. In today's session, led down by the Nifty Bank. The Nifty 2 is currently trading at almost the lowest point of the day, or at the lowest point of the day, to be honest. But it's the Nifty Bank, which is the principal culprit, down about 1%. And the PSU banks, the principal culprit from amongst the Nifty Bank as well. The Nifty PSU Bank Index is down about 3% in the session today. So that's where the pain point is. The mid caps and the small caps bring up the market breadth and show you the last 2 or 3 sessions. They have outperformed in today's session too. The fall is not as bad, and if you look at the market breadth too, not as poor as what the Nifty Bank would like us to believe. The heat map should come up on your screen. You'll probably see a peppering of red, which is higher than the peppering of green, and yes, to be honest, that's the case. But look at here, banks all the way, and SBI featuring right here. Not surprised there. PSU banks are looking slightly wobbly. There is some pain to NTPC after the numbers yesterday. IndusInd Bank also filling in the banking space out there. So banks by and large and financials not looking all that great. On the flip side, not too many gainers. GAIL and a couple of OMCs are doing okay. M&M after the numbers about 1.5% higher, but no big gainers in the stream today. So it's been a bit of a lackluster session. Just very quickly, 2 or 3 pockets of trends that have either done well or not done well, and just highlight what's happening at the mid cap and the small cap end of the market. Stocks which are moving around and stocks which are not. So amongst the top mid cap gainers, Hutco, Arcom and a few others which have done reasonably okay. As you can see, the number of gainers and the kind of gains are not that high, but if you look at the losing set, a fair bit of stocks have lost, and lost quite a bit in the session today. M&M Financial is down, Bank of India is down. It just goes to show that entire financial space is looking very, very wobbly in the session today. And the small cap end of the market, while there will be a few gainers here and there, Uflex, Radico, Khaitan is trading 8.5% and trading at fresh life highs for itself. But I think the losing side and Manpasand Beverages right up there, and hopefully in some point of time the management will decide to speak to us. We've been trying them for the last 2 days. Hopefully we'll get them now and try and talk to them. But that stock is clearly the center of attention, down about 20%, not budging from the lower circuit levels. What about the more liquid universe, Navneet?
Well, Neeraj, yesterday when the markets were trading higher, the India Volatility Index was indicating something else. India VIX was up nearly 3% yesterday, and clearly around the opening only we did see some bit of decline coming by, and currently India VIX is just about flat. Nifty currently is trading with cuts of nearly 50 points. I want to pull up the futures. The discount has widened. It's almost 22 points. Pull up the rollover plate as well. Yesterday's rollover was a little bit on the lower side, but they've picked up 25% as we speak for Nifty rollovers. For Bank Nifty, which is underperforming, but let's not forget this is the expiry week. Expiry takes place on Thursday. Bank Nifty has outperformed for the series compared to Nifty. It's up almost 5% vis-a-vis flattish return that we've seen for Nifty. So PSU and private banking indices, both of them actually have seen cuts in today's trading session. On the option side, the 10,600 and the 10,700 call strike finally are witnessing some bit of OI addition. Remember, last 2 days was all about unwinding on the call strike, but once again some writing has come back into the system, so watch out for that. Nearly 17 lakh shares have been added for 10,700 call. Whereas on the put side, some bit of unwinding definitely seen for the 10,500 strike, which is sitting with maximum open interest for the May series. But if you look at the 10,600 put, which added maximum open interest yesterday, continues to see almost 2 lakh shares have been added, even when the markets are trading with cuts of almost 50 points. Just want to quickly highlight 3 stock futures. One of them is BHEL. The numbers came in today. Good performance on the operating front. The stock's up on very high volumes on the cash side, and the futures do indicate fresh long positions that the traders are taking post the earnings. Nestle, which has been an outperformer for May series, it's up 5% for this series. It's seen some bit of declines, but there is a good amount of surge, surprisingly, that one has seen for May futures, 27% higher. So watch out for that one, at least till the expiry. And Aurobindo Pharma, earnings disappointed for this one. The stock's fallen today on very high volumes on the cash side, 4% lower. Fresh short positions for this one has been seen for the May as well as the June futures.
Okay, so that's the sum and substance of what's happening in the markets. It's Tuesday, that time of the week, wherein our research team gets you some interesting stories and stocks which are moving around. Jayesh, Yash and Yatin are amongst the research team members who are joining in with a quick summation of the top stories and the newsmakers as well. And let's start off with you, Jayesh. Phoenix Mills, we were talking about this in the morning, subdued in trade today, but the last few days, weeks, months and years, it's been on a roll, so to say.
That's right, Neeraj. If you look at the stock, it's trading a little bit down, 7 odd rupees. Last time I checked, it was trading negative. But for the year itself, it has given you 15% return. And in the last couple of years, it has in fact doubled investor money. So definitely, one of the stocks to watch out for. So what we did was, took a closer look at the fundamentals, financials, and what brokerages are saying. Let's have a look at that. Well, first and foremost, it has a diversified portfolio wherein you have operational malls to the tune of about 5.9 million square feet, where under development they're going to add another 2 million square feet to their portfolio. They have residential, portfolio that comprises of about 3.7 million square feet. Hotels business in all gives them about 588 keys, and also they have office space of about 1.6 million square feet. So very well diversified, slightly tilted towards the commercial space, if I may. Now, if you look at the financials, these have been really impressive. If you look at top line, bottom line, all of them showing healthy growth on a 5-year CAGR basis. So revenue 5-year CAGR is about 28%. Operationally, it has grown about 25%, and bottom line has grown about 44% in the last 5 years on a compounded basis. But have a look at the consumption space where they have grown at about 20%. So this is basically what I'm talking about is the mall consumption that has grown at 20%, and the retail rental income from their malls has increased about 15% in the last 5 years, on a compounded basis. Just if you have a look at one of the last year that they did, so their retail consumption growth that they clocked about 9%, and the rental income also they clocked about 13% for this for FY18. Now, if you look at where the management is confident about, or which markets they are extremely bullish on, from their investor presentation I could figure out that it's Bangalore, Mumbai and Pune. These 3 key markets they are expecting that will actually drive growth going forward. Now, if you look at the analyst picture on the Bloomberg, you notice the top right hand side, or if you look at the left hand side also, notice the first line, all 10 analysts have a buy rating and not a single analyst with a hold or a sell rating, and that has been the trend since the month of October that we have seen. The right side shows you the 2-year trend where you have seen that August and September sometime you had one hold rating, and earlier in the year, or rather last year, August, September 2016 had just one sales. Otherwise, the screen is dominated by green. And if you look at the return potential, that stands at about just 3%. But that's also largely to the fact that last couple of days we saw a stellar run for the stock. So maybe these analysts will actually come out and revise their target prices upwards. Let's have a look at what some of them actually have to say. So the first one we have is Access Capital. What they are saying is that firstly the target price they've pegged at about 746 rupees per share, and they say that the rental income across all the Market City malls that they have across the cities that they have, those will actually grow or contribute growth to their portfolio. Also the cash flow that has started coming in, so they're expecting that this cash will actually be used for deleveraging deleveraging of the debt and everything that they have. So those are the two key takeaways from this note. We have another one from Motilal Oswal. Once again, they have a target price of about 737. What they say that if you go through the presentation, there are enough number of malls that are going to actually come up for renewal in the next 3 years. So those will be the focus point, and also that Phoenix Mills has a land parcel in Lower Parel, which according to them will fetch them more than 1 million square feet, added to their portfolio. So healthy growth all over for Phoenix Mills.
Thanks a lot, Jayesh, for bringing all those details with regard to Phoenix Mills, which has been performing really well. Some bit of profit booking definitely seen in today's trading session. Moving on, L&T is trading at 3-month high after reporting strong set of numbers for the March quarter. Yash joins us with what the brokerages have made of the numbers this time around. Yash, over to you.
So in the big brokerage calls, first of all, we have CLSA on L&T. Now they have maintained the buy rating on the stock and have set a target price of 1,730 rupees, indicating a return potential in excess of 25%. Now it was a strong quarter for L&T, as you rightly mentioned, and this has come after beating the order inflow and margin guidance given by the management. They had guided for a flat kind of a guidance for inflows, but that has come in 7% higher. Margins, they have improved. The hydrocarbons business, that has posted a strong 6% growth on a year-on-year basis despite of a higher base of last year and challenging global environments. That is a key point, and they also believe that the company is a good proxy for the domestic capex with a capable strategy to improve their return on equity. That apart, we are also looking at Credit Suisse. They too have maintained the outperform rating on the stock and have set a target price of 1,700 rupees. A strong result with positive margins, and working capital is also seen improving. They have given a strong FY19 guidance for inflows of 10 to 11% and revenues to grow in the range of 12 to 15%, which according to them is quite reasonable and achievable. Margin guidance, that is something that they are concerned about because they do factor in concerns about raw material price pressure. Back to you.
Thanks a lot for that. Well, so that's one more stock. Now, Swansea Afonso of Bloomberg News joins us with the implications of the Tamil Nadu government's orders of shutting down Sterlite Copper Tuticorin plant as well. Swansea.
India faces a copper supply shock after Tamil Nadu government ordered the Vedanta smelter in Tuticorin to be shut. That would remove 400,000 tons of copper from India's production annually, and that's about 50% of the production. So Indian downstream producers will need to import copper at a much higher price. While this is a big shock to the Indian supply chain for Vedanta, it would mean about $200 million to $250 million in EBITDA annually. The company has said that they would now study the order to see what the future course of action would be for them.
Okay, and we've seen some losses coming up for Vedanta. Remember, almost 5% contribution at EBITDA level comes from that copper plant, which is there in Tamil Nadu. But moving on, Yatin's here with us. Yatin, what about Manpasand Beverages? Second straight day of lower circuit coming in there. No respite when it comes to the stock price. Anything latest that you're tracking with regard to this counter?
Well, Navneet, second day in a row, 20% lower for 2 days, 2 consecutive days, so almost 30-40% lost. Of course, it's a very heavy institutional stock, so it's not a small mid cap wherein you can probably look at some panic selling, but it's a heavily institutional stock. The company recently completed a qualified institutional placement. They raised some funds. Of course, Bloomberg couldn't access the Ministry of Corporate Affairs filings done by the auditors and the company. And what we found out that the auditor in its letter to the board and the chairman indicated that the company's management has not been providing sufficient data in order to carry out the accounting as well as the audit work. In fact, Deloitte has been talking about the fact that they have not been giving the data, but also have been talking about giving the data, and there has been a very big delay in providing the data by the management, which has been asked by the auditor. And Deloitte, in its personal capacity, has resigned from the auditors of the company, and probably that is the reason why the market probably believe that there is some suspicion regarding the accounting method of the company and the balance sheet of the company. Of course, the company in its filing said that they are replacing the auditors, but they remained silent from the fact that the previous auditor Deloitte has resigned. They did not give out the reasons why did Deloitte resign. So these are the question marks probably which an investor would raise. Of course, to put it in words, Deloitte clearly mentioned that we observed that there has been no further progress with respect to the pending information, evidences and explanation. Therefore, as informed to you, we will be unable to complete the statutory audit of the financial statement of the company for the year ended 31st March 2018 by May 30th, 2018. So, this is what Deloitte has said. And of course, the company has remained silent on the entire issue. When we tried to contact them, they did not give us a response. But clearly, at this point in time, a big question mark remains on the integrity of the company and the disclosures which they have made to the stock exchanges, which are probably incomplete, and hence the panic amongst the investors.
Certainly, panic amongst investors. A bunch of AMC houses and investors have investments in Manpasand beverages, and it'll be interesting to see what their stance is. We were speaking to a sell-side person, Motilal from Motilal Oswal today, and I think the common refrain is hang on right now because you don't have clarity about what will happen next. Now, multiple rumors floating around about whether there is misrepresentation or no. One of the media houses was talking about how sources have told them that there was probably misrepresentation of accounts. These things can spiral out of hand very, very quickly. So you don't know which way the die will roll out. But clearly, the only factor that is sketchy and which maybe Manpasand should have been more open about was their release yesterday, which spoke about the parting of ways being coincidental around the results, and then we accessing that letter which said something otherwise. So that left a bit to be desired. Had it not been for that, maybe they could have, maybe shareholders or investors were given a benefit of doubt. Right now, Manpasand Beverages is not receiving any benefit of doubt. Down under 20% today after the 20% slam dunk in trade yesterday.
Well, that's right, Neeraj. Even after seeing that correction of 35 to 36% in last two trading sessions, the valuations could be on the higher side. I was just looking at for FY18 basis, still it is trading at almost 30 times. We'll try and get in touch with the management and get some more clarity with regard to this case. But moving on, it's the age of the disruptor, says Shiv Puri of TVF Capital Advisors. He expects renewables in the power sector and fintech among financials to change the course of the industry. And that's where he's placing his bets. Listen in to a slice of the conversation we had with him earlier today.
It's very difficult to pinpoint valuations of companies whose future is highly uncertain. There's almost no price that gives you that level of comfort because you don't know how steep the cliff can be. So, while this could be something in India that plays out over a longer period of time, and therefore if the valuations are cheap, they might look sensible, but it's a very difficult game to get right.
Yeah, I guess so. Interlinked to this pocket or these pockets, Shiv, because these are capital intensive projects, are the financiers of these projects. Now there is hope that at some point of time, some of the monies that have been invested into these projects might see some returns. What happens there? Do you believe that those are lost causes as well?
Well, it depends on which specific project, whether it's operational, what sort of PLF it's operating at. But if you look at the state-run banks, the biggest source of problems that are emerging now is the power sector. They've taken down all the recognition on infrastructure and the other areas, but power is where the pain is still ongoing.
That's true. Okay, let's dwell a bit on the financial space there. I mean, if I look at your holdings as well, at least the ones that are available on a terminal, you are betting in a reasonable way on some of the financiers. So many people tell me about the lending super cycle that we are already in, or maybe amidst at the household debt to GDP ratio for India compared to the EM market, Korea or any of the others so low that people will borrow more, and therefore all financiers which manage their books well will do well. Do you subscribe to this thought? And if so, it's such a big bucket, where is it that you think the winners will emerge from?
Yeah, so financial services in India have got two components. One is the underpenetration, what you're talking about, which has a ways to go. But the second is also the market share shift, which still has also a long way to go. So it's a combination of those two things that will play out. The important thing, I think, in India is to realize that the private sector banks and some of the financial services companies, the well-run ones, are in a wonderful position structurally. And it's not because their balance sheets are good and they're taking share from the state-run banks who have NPA issues. That's, we all know. But also because in a world where technology is going to get more and more valuable, and I've been saying this for a while, the delta between them and the state-run banks is only going to widen. And it's very interesting. In India, one of the, I think, very sensible things that have happened is that the government has opened the digital platform, right, with the UPI, and they've developed apps on that like Bheem. We obviously have the mobility penetration rate that's already there. And private sector banks are the ones that are sitting on the data of consumers. This is very different than the China model, which I've seen at very close quarters, where you have two payment companies that control the data, that control the transactions, and have all the history. So in the context of India, I think these are the companies in the private sector space that have the huge advantage. Now they have to leverage it, and they have to be doing things, and I think some of them are doing that very well.
Interesting. You may not be at the liberty to name stocks, so please feel free to not do that. But and please correct me if I'm wrong, but if I look at your holdings, Shiv, you don't have too many large private sector banks, right? I mean, you have holdings in City Union, Repco, Bharat Financial, which are not necessarily the A-list, so to say. How is it that then you've chosen the kind of bets that you've chosen? When you're talking about how it's the private sector banks, etc., which seem to be at the forefront of this revolution, if I can use that term.
Well, like I said, yeah, you're right. I can't name any names, but I'll say that the list is very dated. And if I look at some of the larger private sector banks today, they are in an unusually good position because they have, first of all, world-class management teams. If you look at some of the statements that are coming out of some of the well-run companies, and you see their behavior, you have CEOs spending time, weeks in a year in Silicon Valley, and they are attracting some of the talent from there. There's a big private sector bank that has a large incubation set up in Bangalore, where they're incubating 30 or 40 companies. They're really thinking of how to partner with these companies in the fintech space. And these companies in the fintech space also realize they need the customers of the banks. They're not going to be able to get them like they did in China. So these guys are unusually well positioned, and some of the results are already starting to show. I mean, if you look at the cost to income ratio of these banks over the last 4 years, they've gone down quite dramatically, and I think there's a lot more that's going to come on that front.
Interesting. My final question, Shiv, you spoke about how a couple of large companies in China dominate one aspect of the financial services space, if I understood you correctly. That seems to be the case that could happen in India in the retail space, right? With the latest move that's happened and the large deal, Indian online retail at least will be dominated by two major players. At least it seems to be the case. Have you looked at the Indian retail space, both offline and online, and who do you think will emerge triumphant over the next 4 or 5 years? Are you betting on this space at all?
It's interesting. I mean, India is one of the unique markets where you've got the equivalent of a Walmart and an Amazon coming up at the same time. In the US, what happened, you had, mom and pop retail move to organized big house retail, discount retail like Walmart did. And then, after a number of years, Amazon came. Whereas in India, the organized retailing industry, the brick and mortar industry itself is very young. So you've got both these models that are coming up simultaneously. And in the context of India, I think both have their place, and they both have some advantages. So I'm not so sure it'll play out like the US, where the entire market, like you said, has moved online. I think there's an opportunity here for both sides.
Okay. So that's the view from Shiv Puri. I must tell you, we tried and touch base with Manpasand Beverages, but the management is not coming to talk on air. I don't know for what reason. I mean, if everything is hunky-dory, there shouldn't be any issues in talking to all media. Why just selectively? Somehow the management refuses to talk to us. Anyways, we'll try and get in touch with them at some point of time. Let's talk about that issue and a lot of other things that are happening in the markets today. By the way, we're trading, as we said, close to the day's lows, but that may be also because we've had a good rally for the last 3 days and we are close to expiry. Avinash Gorakshakar, he's head of research at Joindre Capital Services, joins us right now in the studio. Avinash, good afternoon. Thanks for joining in. Before we talk about the markets, just a quick word. If you are indeed a shareholder of Manpasand beverages, I know the easy answer is that you would be worried because the stock price has gone down. But would you be more worried because yesterday the release didn't state anything about how the auditor has resigned?
Yeah.
They mentioned about how they've parted ways in that sense. It was not a true reflection, if I can call it, of the situation. A management which has got nothing to hide, so to say, would give a true and fair reflection of what's actually transpired as opposed to, dare I say, sugarcoating it in sweet words. Is that a worrying sign for somebody who's a shareholder at Manpasand?
No, I think Neeraj, clearly, from the news release, what we came across on the BSE website, I think the auditors have clearly stated that some information which they wanted was not parted by the management, and that was the reason, they gave in their resignation. But clearly, I think a more counter argument could come if, the auditors are interviewed by you and possibly you get to know the other side of the story. My sense is, I think whenever auditors resign, and that too, very reputed auditors, it definitely means a loss of credibility, because clearly these are issues which are not, taken very comfortably by the markets. And I think just like what happened in case of Vakrangi, I think clearly the markets are worried that whether the numbers which have been put out are really genuine, or possibly there's a kind of misappropriation of numbers, because there have been a lot of institutional houses which have actually put a buy on this stock. I don't know what's the view from those.
Serious concern, Avinash. Do you really think it can be a Vakrangi story?
No, I think, whenever the auditors resign, Navneet, I think it's a question mark. It's a big question mark. And I think whether we like it or not, I think finally numbers have to be believed. And, if credible auditors resign, then I think it's definitely going to put a shiver in case of those institutional holders which have taken a big call. They did a QIP. So, most of the merchant bankers, as everyone is aware, Neeraj, without, naming them, I think, clearly they are on the side of the promoters. So, they do want to, support the price. But clearly these kind of issues definitely are not something the market should like. So, clearly till some clarity comes in from both the auditors and the management, and they be little more clear and crystal, honest, I would believe that, nobody would be willing to, catch a kind of a falling knife. The stock could possibly see further downside, if no clarity comes in.
And a very interesting point, we were chatting with Amit Mantri yesterday, who had written an article, Curious Case of Manpasand, right, I think in 2016. He also said the time gap between the IPO and the QIP was really short, and it's quite surprising for a company who's just raised money in an IPO to go out and raise funds once again.
I think, that was quite surprising, because clearly one could not expect, such a quick equity dilution, and that too at a very significant market premium.
Okay, we'll try and get in touch with the management once again and trying to get some clarity with regard to what's happening with the company, and also when exactly will the financial results come out. Now remember, the numbers were slated to come out tomorrow, but after the auditors resigned, the management yesterday gave a press release to the exchanges informing they will be deciding on the new board meeting date with regard to approving the results of March quarter. But let's get back to technicals. 10,648 with regard to where Nifty is currently trading, and today is the day when the bank Nifty is underperforming, down almost 1.2%. Let's bring in Sacchitanand Uttekar, Deputy Vice President for Technicals for Equity Tradebulls, who joins us on the show now. Hi Sacchitanand, good afternoon, and appreciate you joining us today. What's the call on Nifty and Bank Nifty? Bit of correction seen after a run that one had seen in the last 3 trading session. Is it changing the template for the market?
Well, good afternoon. In fact, we are not of that opinion that the texture of the market is changing. But yes, when we look at the momentum, the momentum seems to have stalled. So if you look at the overall recovery, we saw 600, close to 600 points of a decline. And in last 4 trading sessions, this 50% of this particular move has been already retraced. So it's a very visible sign that the market is just cooling off. We are in the expiry week. And if you look at the overall bounds that we are looking at is around 10,550 holding as a very strong support. On the higher side, there is some resistance close to 10,730, 10,800 mark. So probably we may see some consolidation here, during the week. It will be very prudent to see how the market reacts in case of 10,550 is breached. Probably then we can conclude that the overall trend that we saw was just a bounce back, and the downtrend could resume. But I think as of now, the way we have reacted from the lows of around 10,410, this looks like an emerging new impulse, and probably one should wait it out. Probably one has to review the trend only below 10,550. Until then, I think the bias should be positive, and every decline should be utilized to create long positions so far as Nifty is concerned.
Okay. Amar Singh is with us as well to speak about the charts. Amar, how are you approaching trade today? A bit of a pullback after 3 strong days. What do you do in the run-up to the expiry?
I would say that today's high is now going to act as a very crucial resistance because technically looking at the charts, the pullback that was there was more on the lines of the Nifty and the major indices being in the oversold territory and also being around key support levels. But sustaining above the 10,700, 720 mark, that is something which is going to be something very crucial and important. Because if it is not able to sustain above that level, then we are likely to see or witness some selling pressure coming coming in the indices and also in the stocks. And then the next level of support would come around 10,540 to 560. That would be a level of support. But yes, I see that 10,700, 720 seems to be capped at the moment. So we could trading above that only would mean that the upside would resume. Otherwise, we will see some fresh selling coming into the market.
Okay, so the question is then, what about specific stocks? And Amar, let me come to you only first. What are the stock recommendations that you are giving our viewers this afternoon?
I would say, looking at the stocks, Pidilite is one stock which I've been talking about, and looking at it technically, it continues to remain strong and firm. And so any pullback towards 1160, 65, that can be used as a buying opportunity. With a stop loss of 1121 and a target of 1247 in the short term. The other stock to look at is Divi's Lab. What we're seeing in Divi's Lab is that technically the stock is witnessing selling pressure, and also the short-term trend continues to remain bearish. So any pullback towards 1080 odd levels can be used as a shorting opportunity with a stop loss of 1121 and a target of 1001 on the downside.
Okay, those are some individual stock recommendations coming in from Amar. Sacchitanand, what about you? What are the trading recommendations for the day?
Well, since the market is more on the consolidative front, what we are recommending is a long short kind of a combination. So if you look at today's momentum, that is very clearly seen in some of the liquor names. And if you look at United Spirits, the stock has been in a healthy trend. If you look at overall momentum, the convergence in the short-term averages is indicating that the move can extend towards say 35.40, and that's why we are recommending long positions even at this juncture with a stop loss close to 32.70. On the sell side, there are signs of distribution among some of the IT names, and if you look at the way TCS reacted from its recent highs, it clearly signifies there is a short-term peak which has been established, and that's why we expect that the move which has matured from there could extend further towards 3300. So a short position on the positional front can be initiated in TCS, keeping a stop loss somewhere close to 35 on the Nifty on the TCS futures, and an expectation of a move towards 3300. So these are the two ideas that can be deployed at this juncture.
Okay, those are some trading recommendations coming in from our technical experts. Just want to pull up India Volatility Index. I think it suddenly surged in the last 15 to 20 minutes of trade. When we started this show, it was trading flattish. It's now trading with gains of 1.5%. Remember, expiry being on Thursday, you could see heightened volatility to come by in the markets. Avinash, you had given us a call, a fundamental call on GNA Axles few months back, I believe, and the numbers came out yesterday. What did you make of the numbers, and are you sticking to your call?
No, I think numbers have come out quite strongly, much ahead of what the management actually commented earlier. And I think the markets have always believed that this management has always been extremely conservative. In fact, the management is now talking about 18 to 20% kind of growth this year, which also looks very conservative if one looks at the numbers which came out from Mahindra and Mahindra, from the farm equipment business. So I think clearly one could see a stronger traction, and we could possibly see a 25 to 26% kind of growth in top line, and obviously with margin improvement. So GNA Axles obviously is definitely a stock which should do well even in FY19, and our sense is even the Class 8 truck market continues to do well. So on both sides, the domestic as well as on the export side, this company is well positioned at least for the next 6 to 12 months.
Did the BHEL numbers surprise you on the operating side?
Actually, numbers were much better because of the base effect, and I think there is some one-off which actually has led to an improvement. But if you see the margin improvement and obviously the execution, I think that is something which is much better than the previous quarter. So I think overall, what kind of management commentary comes out, what kind of order execution takes place in the next fiscal is going to be extremely important, because most of the negatives, Navneet, have been factored into the price. So I don't think any significant downside was expected, but yes, numbers have definitely been a tad better than what the street expected.
Yeah, I thought the margin performance, Avinash, we still don't have power grid numbers, I believe. BPCL, other one, Coal India will come out. But L&T yesterday, NTPC yesterday, BHEL today, the old economy stocks seem to be coming out with fairly decent set of numbers as well. Large cap or mid cap, though I can agree Thermax didn't come out at the best of quarters. But within this bucket of old economy names, is there anything, the numbers of which looked so interesting that you would be willing to reconsider your stance on the stock?
No, I think L&T definitely deserves a second look, because if you see the numbers, the markets were of the view that last year what guidance they gave of 5%. That itself was looking like a challenging figure, and now going forward in FY19, they have been talking about an order inflow guidance of almost 10 to 12%, and plus margins have improved. So I would believe that looking at the defense piece, the infra piece, as well as the hydrocarbons piece, clearly I think order execution is happening faster and order wins have been happening. So clearly L&T, Neeraj, could be a very strong kind of positional play over the next, say, 12 months. Hopefully, macros improve. But this is one company which has actually underperformed for a long time. And I think at least the fourth quarter numbers clearly spell out a very strong improvement in the operational EBITDA kind of margins.
Yeah, two mid-sized companies which are knocking on the doors of new highs. One of them is Radico Khaitan. I think this whole pack turned around a bit after United Spirits numbers. So Radico Khaitan, the last 2 or 3 sessions since United Spirits came out with numbers, is doing very well. It's not just today's move. Actually, even USL is up. But look at Radico Khaitan the last 3 days or the last 7-day chart, and you will see post USL numbers, Radico Khaitan has had a one-way move. 470 trading at new life highs for itself. This is the 7-day chart, 16% higher, exceptional moves there. The other one which has done very well and now trading at new highs is Edelweiss, 337 and counting, another 3%. This is knocking on the doors of fresh life highs for itself. While I want a technical view on a trade view, a fundamental view first. Do you track Radico Khaitan, Avinash?
Yeah.
Okay, what's your thought here? And if you do like this space, is Radico the better bet here, or do you like some other stock? There are 4 or 5 listed names. It's a very small pocket.
I think within the given space, United Spirits and Radico Khaitan both look quite strong. In fact, Radico Khaitan could possibly see a stronger upside, considering the fact that volume growth has been pretty good, margin improvement has also come in. And Neeraj, the sentiment for these stocks has now taken a big upbeat. In fact, most of these stocks, are classified as most of the sin stocks. So, these are stocks which are now being loved by the markets in these kind of volatile times. So, you'll see a lot of these companies actually, tagging along the consumption theme. And I think consumption is something which the markets are comfortable that over the next, say, 2 to 3 quarters, you could see a very strong kind of performance in terms of the operational earnings. So, I think basically, cruising along across the consumption theme, which I think has now started moving up post GST, post demonetization. So now the numbers possibly in FY19 could be a lot better. We saw a lot of pain in the past 2 to 3 quarters.
Well, if you...
No, sorry, I just wanted a technical view as well, Navneet, on these stocks. Sacchitanand, Radico, Khaitan, I think SOM has gone up. United Spirits is doing really well the last few days. Out of these 3 or 4 names, do you track any on the charts? Are any of them worth a trade?
Well, the one which we discussed is United Spirits, where there's a clear-cut trade, and even Radico is looking fantastic. In fact, if you look at the peer comparison, the stock has been a clear-cut outperformer. Even on the weekly scale, we are seeing a fresh flag pattern breakout, which is indicating that there's further thrust which is still awaiting. So the price target is coming somewhere close to 520 on the higher side. On an immediate basis, the stock could elevate itself towards 490. So I think so long as 440 is defended on the stock, I think there's a clear scope of further up move. So I think from a trading perspective, a stop loss can be placed around 440 and positional longs can be initiated even right now. 520 would be the overall target for this particular pattern.
Okay, that's the view on United Spirits. Avinash, I just wanted to check, since these stocks have been tagged as consumption stock and they do attract something like syntax, which is not called a syntax right now, but if one were to look at products like alcohol or let's say cigarette, ITC has been underperforming if I look at last 1 year. Don't you think the risk reward for ITC could be better as compared to these alcohol stocks? Or still it faces?
No, I think clearly, the liquor stocks could still be considered much better. If you look at segments like beer, which is a growing market, and I think the consumption theme will possibly be more strongly felt, in a segment like liquor and more specifically beer. So to that extent, I don't think ITC as a kind of a product could possibly get a further and a bigger kind of re-rating compared to the liquor stocks. So I think you're right. If at all, some sort of syntax does come in on these companies, it could be a short-term negative. When the highway ban did come in, we saw a big sell-off on these stocks. But I think the overall story is that consumption is a big theme, and people are willing to pay that cost push increase, and it does take a time lag. But once it happens, I think the the incremental growth is much stronger.
Okay, that's the view on liquor as well as ITC, which derives almost 80% of its bottom line from cigarette business. Just want to pull up a few stocks. Pull up Nitco Limited. That's surged almost 12 to 13% in trade. I guess the earnings had come out today and they've turned profitable for FY18 versus FY17 where they had posted a loss. Avinash, do you track Nitco?
Not exactly, but I think this company has been into loss right from the time it went public. So I think if at all it does show a strong operational performance, Navneet, they have a very decent market share, a very strong brand, and most importantly, most of the other tile manufacturers like Kajaria or typically Somani, these have actually gone across the roof. This is one stock which has actually not gone across because earlier the company had problems of capacity utilization and was not breaking even. So possibly you could see a good re-rating here, provided we see some consistency in the numbers going forward.
Okay. So same line of business as Kajaria Ceramics, that too is up in today's trading session, sitting with gains of almost 3%. Sacchitanand, on the charts, any view on Nitco Limited?
Well, the volumes are very inconsistent. In fact, it has attracted multifold volumes today, but sustenance is something that is more important from here on. I think 90 is the level above which it has to consolidate. If you look at the headwinds, I think the short term or the 200-day exponential moving average is placed somewhere close to 95. So where it is trading right now. So I think it needs more of a consolidation rather than a fresh momentum, and that probably could strengthen the overall uptick that we have seen so far. But as of now, there is no trade which is available.
Okay. Well, about 2:43 and 45 minutes left for trade. Just looking at stocks which have just gained or lost in the last few minutes of trade, and at the broader end of the spectrum, I think Ipca Labs in the last few minutes has gained a little bit. Last maybe 20 minutes has gained a little bit there, a bit of a surge in Ipca Labs. Adani Transmission I think has done that. Cera Sanitary Ware has also done that. So there are 2 or 3 names which have done well. What's not done well and gone off in the last few minutes, Godfrey Phillips has had some bit of a selling pressure in the last few minutes of trade. Hathway Cable looks slightly wobbly, and Apollo Tyres has gone down a bit. You know, Amar, coming on these tire companies, about 3 or 4 days back, we got a social media query on SEAT, wherein it was trading close to the year lows or thereabouts. But that notwithstanding, Apollo is down today. SEAT has not been the best of move players the last few days or weeks. What's the trade here in the tire names?
I would say first I'll talk about Apollo Tyres. See, Apollo Tyres continues to be in an uptrend. There's no doubt about it. But yes, on the upside, it is now meeting with resistance somewhere in the region of 295, 300. Currently, it's around 280 odd levels or so. Whereas on the downside, again, if we look at the stock has got good support coming in the region of 260, 65. So it's gone in a consolidation phase right now, with the overall uptrend remaining intact. So as far as Apollo Tyre is concerned, that's the view. Looking at SEAT, what we are seeing in SEAT gives a completely different picture. It is, I would say, on the monthly charts, we've seen selling pressure. Even on the weekly, it's moved in oversold territory. And it is forming some sort of support somewhere in the region of 1300, 1320. Currently, it's around 1370. So technically, looking at the charts, Apollo is stronger. But yes, we are witnessing some consolidation. SEAT, what we could see is that if 1300, 1320 is held on the downside, then the stock would go in a consolidation zone with a immediate resistance on the upside coming at around 1400 to 1420. So it's, I would say, as I said, tire stocks are going into consolidation with Apollo as well, and SEAT definitely on the 1300 on the downside and 1400 to 1420 on the upside. But I wouldn't recommend a buy in SEAT at these levels also.
Okay, wouldn't recommend to buy SEAT at current levels. That's the view coming in on the tire space. Pull up Uflex. The numbers had come in yesterday, and the stock today has gone up on very, very high volumes. It's trading with gains of nearly 11%. Remember, the profits were lower because of higher depreciation that was given in the numbers on back of one new plant which the company has been commissioning. But it's not every day, Avinash, that we see a move of 11% for something like Uflex. If you did get a chance to look at the numbers, how is this one looking?
No, I think numbers were pretty good if you look at the depreciation, pre-depreciation number. But otherwise, the markets had given it a strong beaten down performance, largely because of the crude oil price. The main input cost is dependent on the crude oil price. But overall, if you see the kind of positioning the company has made via the new plant in Sanand, Gujarat, I would believe that the impact of this plant would be fully felt in FY19. And I think the markets are taking of the view that possibly now incremental volumes from a very high valuated product stream could start in, and possibly we could see a stronger earnings trajectory for FY19. So all in all, I think the stock has got several legs further for a good amount of earnings growth over the next, say, 12 to 18 months.
Okay. Uflex is up. Can we also pull up stocks which are trading at 52-week highs? I would. We've already spoken about Edelweiss and some of the others. Can we pull up Jubilant FoodWorks? It was trading at 52-week highs at least until yesterday. In today's session, it's actually come off quite rapidly, 2597. So after nudging those highs, the stock is down and fairly decent volumes as well. Maybe Navneet would have some thoughts on what's the FNO positions looking like out here. But first, the fundamental call out here. Avinash, not cheap by any stretch of imagination. The uniqueness premium, because there aren't too many players available which are doing this kind of work. Would you pay top dollar for Jubilant at the levels that it is trading at?
No, I think we have seen a very strong outperformance, Neeraj, and typically we find that the reason these stocks have been valued at very steep valuations is because the market believes that earnings visibility is very strong. So I would believe that somebody who's got a 2 to 3 year kind of view can definitely still think of buying these stocks because we have seen stocks like DMart, where valuations have been extremely high, but still the market believes that the re-rating would continue. So I would believe that yes, if one were to buy for a portfolio perspective, one should look at a decline. But looking at the kind of business model and the consumption theme, I would not be surprised that FY19 and FY20 would still be very strong years, and clearly the markets are willing enough to pay a significant premium premium, to these kind of businesses. So I think unlike most of the commodity names or the cyclical names, these are companies which could show consistency in earnings, and that probably explains the fact that valuations for these companies would definitely remain in pretty high numbers.
Well, Neeraj, it looks like more of a case of long unwinding because the stock has been moving higher. So no major open interest build-up actually seen for Jubilant Foodwork, but a 5% downtick. Let's see if there is any sort of pullback which comes from these levels or not. But pull up ICICI Bank, a heavy weight, the top loser on Nifty right now. It's down over 3% in trade, 3.3% at day's low. Sacchitanand, on the charts at 289, would you recommend initiating a fresh position on ICICI Bank?
I think the stock is locked in within a range on the lower side, 285, 282. There's a decent amount of support at the stock, and on the higher side, the stock is finding it itself difficult to surpass the 300 band. So I think the stock may oscillate within this particular range. A breakout or a breakdown of this particular range, and then we could see a good direction move. So probably not right now, but definitely outside this range, there could be a very good opportunity. But as of now, one should avoid.
Okay, stay on, Jamin. So much more to talk about. We can't do it from Manpasand beverages, can we? It's been stuck at the lower circuit for the last 2 days, and with the company choosing not to clarify on some of the questions raised by previous auditors, it doesn't seem to have an upside for recovery very soon. Jayesh Kilani has some math on what mutual fund has lost how much over the last 48 hours. Jayesh.
Neeraj, so first and foremost, there are 14 such Indian mutual fund schemes wherein they have more than 1% of their total asset under management exposed towards Manpasand beverages. Now, with nearly 35% being lost in the last 2 days, definitely they would have had some impact. Let's have a look at which mutual fund scheme or which houses have highest exposure and what kind of hit they would have taken. What you have on the screen is the blue bars, the number of shares corresponding to the fund scheme names that are there on the x-axis, and you have the yellow line, which is the value that has been eroded in terms of rupees crores. So first and foremost, we have Motilal Oswal, the multi-cap 35 fund. They have about 58 odd lakh shares of Manpasand, and as per yesterday's or today's price action, they would have lost another 40 crore rupees today itself, aside of the 20% that they would have lost yesterday. Second, now what is interesting is from number 2 to 5, all of them are from the SBI mutual fund house. SBI Magnum Mid Cap Fund, they have exposure of about 30 lakh shares, and they would have lost nearly 20 crores. The SBI Magnum Tax Saver Fund, they have about 10 to 15 odd lakh shares, and they would have lost less than 10 crores. So is the case with the SBI Magnum Multiplier Fund and the SBI FMCG Fund. So value destruction going on where the Manpasand has been taken exposure towards.
Thanks a lot, Jayesh, for bringing that chart of the day with regard to the details of the mutual fund holding in Manpasand Beverages, a stock which is locked in lower circuit for the second straight day. Well, 10,630 for the markets. Pull up M&M Financial, pull up Raymond. All of them are in the futures and options market, and they've seen a sharp correction. M&M Financial is now down nearly 6% in trade, and Raymond too. Remember, this too has been going up. I guess the earnings, post the earnings discounter, had seen some bit of an uptick. So that's down nearly 5% in trade at day's low. Amar, on the charts, any thoughts on these two counters, M&M Financial as well as Raymond? Is there any position that one can take?
First, I'll talk about Raymond's. What we're seeing in Raymond is that the long-term trend definitely remains positive, but yes, short-term trend, we are seeing some selling pressure. However, it has got very strong support in the range of 975, 970 and 975. So that can be a level one can look at a buying opportunity with a stop loss below 960 and a target of 1025 on the upside. And looking at the other stock which you talked about, M&M Finance, here what we are seeing is that again there is some selling pressure which is coming in. So it's more or less trading in a range because the long-term trend remains positive as well as the short-term trend we are seeing it in oversold territory. So on the downside, I would say 440, 450, that's a very strong support zone. Whereas on the upside, again, 480, 490. So it's going to trade in a range. So I don't see much of an opportunity there in M&M Finance right now.
Okay. Well, a bit of a repeat recommendation, but good stories are always worth told again. And Avinash Gorakshakar wants to revisit Ashapura Intimate Fashions. Avinash, I believe that's the stock that you have for our viewers today. Good to reiterate a good story. Consumption is anyways in the thick of things. Why do you like this one?
No, Neeraj, first of all, Ashapura will be declaring its annual results today. And our sense is that in FY19, two key triggers are likely to be played out. One is, the short-term debt on the balance sheet is going to be significantly reduced. In fact, they've already gone on record saying that the amount they received from the sale of treasury shares is going to be reduce the long-term debt, which was roughly about 40 odd crores. In FY19, they're planning to sell off one of their properties in Dadar, Mumbai, which would actually gross about 30 to 35 crores, and that money is going to be coming in the first half of this next financial year, that is FY19. And I believe that once the debt on the balance sheet goes off, the company is pretty hopeful. The management has gone on record saying that over the next 2 years they could grow by 30 to 35% and maintain EBITDA margins of 18 to 19%. So clearly this is a high EBITDA margin and a very high return on capital employed business with a very strong brand positioning company within the lingerie market. And this market fortunately has got very little competition. They have been growing by almost double-digit numbers in the last, say, 3 to 4 quarters, and with now the GST and the demonetization effects completely getting neutralized, I would believe that earnings growth over the next 2 years is going to be very solid. In fact, our sense is that operationally we could see an earnings about 11 to 12 rupees for FY18, and which could actually multiply to 23 to 24 rupees by FY20. So we are getting a stock at 20 times FY20 earnings, and which looks pretty attractive if one were to consider the kind of earnings growth and the kind of positioning these guys have put in. Consumption themes have got a very high kind of multiple expansion across many companies like Page, or for that reason Jupiter. I would believe that this is a stock which one could definitely include in the portfolio, provided one can wait for the next, say, 12 to 18 months. One could easily see levels of 600 here.
So the last time that we spoke, Avinash, the stock was at 450-55, but the valuations as of now, because we don't have the results, haven't changed. But I mean, the earnings haven't changed, right? The earnings picture, but the prices moved up. So it's a lot more expensive a stock, 10% more expensive than what it was then. You would wait for seeing how the numbers turn out and then buy the stock? Let's say for somebody who is wanting to wait for the numbers to come out and buy the stock, are you comfortable buying it at slightly higher levels as well, or these are about the levels at which you would buy?
No, I think anything around 475, 480.
It's currently at 490 though.
No, I'm saying, anybody who wants to buy the stock can possibly take a punt before the results. But my sense is we have seen in most cases, once the result does come out, the stock does attract a little bit of profit booking. So we could see a little bit of sell-off. So 480, 490 or maybe 485 is a price where possibly, the stock should settle down. And for these companies where earnings growth and where the top line growth is extremely solid and, growing very rapidly, I would believe that, the investor just has to give in some time, Neeraj. These are companies which could see multiplication of wealth even over the next, say, couple of years.
Let's wait and watch. Ashapura Intimate Fashion, something that Avinash Gorakshakar has liked in the past. If you heard him then, you're already sitting on some money. Time now for a short break. On the other side of the break, we get you the Fab 4 stocks, we get you what dealing rooms are recommending in the session today, and of course, some closing strategies.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution hai. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है। चल।
NSE Merge, साथ हमारा, सफलता आपकी। The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
You have to chase the value. What market is reflecting is change in the value. It is because of value migration that you keep seeing the new businesses coming up, new companies coming up. It is a wonderful book by a professor from Harvard, a must read.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're still watching Countdown with us. 28 minutes to go for markets to close, and we've got some earnings flashing there on the screen. Coal India has come out with its Q4 numbers. The net profits have come in at 1,300 crore versus Bloomberg estimate of 4,341. So it's way below what the estimates were throwing about, and you can see the stocks reacted negatively. The top line, however, is above what the estimate was throwing about. So the consolidated revenues are at about 26,910 versus the estimate of 24,720. Let's see if there is any sort of one-off which has been reported in the earnings, which has led to lower bottom line growth for the quarter as well. But the other factors actually which will be important to note for this one will be realization per ton, which was expected to go up 14% sequentially, and also EBITDA per ton, a very important metric for a company like this, that was expected to go up by almost 33%. We'll also tell you what the margins stand at. You were expecting the margins to go up to be at around 33%. I've got the press release here. If you look at the finance cost is 112, just looking at the numbers where there's a substantial increase. Okay, so not surprisingly, Avinash, employee cost looks like that's dented. It's almost 16,653 versus 9,240 that was seen in the corresponding year. Was it expected? I guess they had announced they were increasing, right?
Yeah, they had announced, but you know, the markets was going with the fact that this quarter could see a very strong operational beat as well as a bottom line beat. So I think despite the fact that this provisioning number has come in, I would believe, Navneet, these are definitely disappointing numbers, and we could see a kind of a correction definitely, because clearly, you know, if this is an agreement for the next 3 years, because Coal India normally enters into a labor agreement for the next 3 years, whether they have front loaded all the costs or whether, you know, this is a one-time charge, I would believe that this definitely seems to be a big disappointment, especially on the net profit level.
So, well, clearly more than or near doubling of employee cost is something which is weighed on the operating performance and weighed on the bottom line for Coal India. Thanks a ton, Avinash, for joining us today and taking us through your views on the markets. We'll get you more details as to what the margins have stood at, but clearly the one number which, according to me right now, stands out with regard to Coal India's numbers is doubling, just near doubling of the employee cost, 16,653 versus 9,240, which was seen in the corresponding quarter. In fact, even if you look at the December quarter employee cost, that was 8,753. Okay, let's move ahead. and talk about the Fab 4 stocks of the day. As usual, Yash Upadhyay joins us with the list of the Fab 4 stocks. Hi Yash, good afternoon.
Good afternoon, Navneet. So first up, we have BHEL. This one has surged as much as 10% today. A couple of triggers. First being their earnings. Exceptionally good set of numbers. Their revenues, they have grown by 4% to 10,140 crore rupees. Their net profit and margins, they have both more than doubled. Their order book currently stands at over 1 lakh crore rupees at the end of financial year 18. That apart, they also came out with an announcement where the board of directors, they have given their approval for the transfer of the 51% stake in their subsidiary BHEL Electrical Machines to the government of Karnataka. Arcom is up 4% today. It's featured on our Fab 4 list for the second time this month after the company informed the NCLAT that its subsidiary Reliance Infratel that has entered into a settlement agreement with minority shareholders holding close to 4.86% stake in the company. Now this is a positive for the company as it would enable it to sell close to 8,000 crore worth of assets and help it come out of the insolvency proceedings. Vista Pharma is locked in a 10% upper circuit. It's a small cap pharma company, has a market cap of about 120 crore rupees. It's up today, the trigger being that it has received the under approval for the acquisition of a new drug called Eurocare. The press release says that it has a market size of about $1.3 billion and it's a very rare drug and has very little to no competition. So that should be a positive when it comes to their earnings. And finally, we are also looking at ITDC. This one's been moving for the last 2 trading sessions. It has a great start to this week. It's up close to 10% in that period with volumes to almost 6 times the 20-day average. Back to you.
Thanks a lot, Yash, for bringing those Fab 4 stocks of the day. I want to pull up Coal India once again. If you could just pull up the charts. Remember, the stocks in focus after the numbers of the company have come out. So there was a sharp slip, as you can see, post the numbers came. Reason being the profits, the bottom line and the operating performance has been way below because of higher employee costs. But sharp reversal has also been witnessed from the lows of the day for Coal India. Amar, on the charts at 281, how is it looking? Is there any fresh trade that one can look at for Coal India?
I would say looking at Coal India, there is some very strong resistance around 285-86 levels. Currently it's around 280-81. So I would say it's more or less in a consolidation phase, and on the downside 270 to 275. That's a very strong support zone. So I would say it's right now trading in a range till the time it really doesn't break out 285-86 on the upside. I would say it's likely to consolidate, and also we'll have to see how the results actually impact the prices.
Clearly, there's been a reversal from the lows of the day for Coal India, and maybe the reason which the street has already factored is the higher employee cost. But I just want to take a few queries that we're getting from our viewers who are watching our show right now. Ravi Shankar has written to us on YouTube. He wants a short-term as well as long-term view on Jain irrigation. Ravi, I'll get you the short-term view since we right now have the technical analyst with us. Sacchitanand, I'll come to you. Jain irrigation, a trader's favorite stock, and let me tell you, it's also in the F&O ban for today's trading session at least. What's the short-term view at current levels for Jain irrigation?
Well, clearly, if you look at the performance of the stock, it had come out from its recent highs around 150, and it has managed to take support somewhere close to 95, and the rebound has been good. If you look at the weekly formation, there's a bullish hammer which has occurred, which is indicating that there may be some relief in the counter, and we may see this move extend towards say 110, 112 levels. So probably if he has a long position, I would prefer that you should hold on to the position until and unless the stock trades above 102. That will be a stop loss for his trade, and 110, 112 would be a likely target in the short term.
Okay, that's a hold coming in for a Jain irrigation, and some more queries I'll just quickly address. Saurabh Shetty is asking why is Aurobindo Pharma down. Saurabh, the numbers had come and the earnings were way below what the street was estimating. So what you're seeing on screen with regard to the stock price movement is solely on basis of the earnings of Aurobindo Pharma. The other one, actually when I was looking at it, Advait has written about Kaveri Seeds. That counter is up, mind you, for the 4th straight trading session, and in the last 4 days it's up nearly 4 13 to 14% in trade. He's asking if this can be still a good buy at current levels of about 536. The numbers that come out last week, post which the stock's been moving higher. Sacchitanand, on the charts, would you recommend somebody buying Kaveri seed, which has seen momentum in the last 4 sessions?
Well, the recovery from the recent low, which was established somewhere close to 463, has been very sharp. The stock is quoting somewhere close to 535 right now. The best part about the recovery is the pace at which it has come in. So I think there is a good chance that the hurdle which is placed around 560 could be breached, and probably with that anticipation, one may initiate a long position even at this juncture. The reward to risk would be very sweet. 510 is the stop loss that I would prefer. The extension or the momentum could only be unfolded once the stock starts trading above 560, above which there's not much hurdle until 585, 590. So probably from a short-term perspective, 580 should be the likely target, and 510 should be the stop loss for the trade.
Very quickly, before we go to M&M and they're starting speaking, Sachin Shah is also with us. But Navneet, quick 30 seconds. Stocks that could enter the ban or come out of the F&O ban.
Okay, just 3 stocks which are likely to come out of the F&O ban, namely Reliance Communication, Divan Housing, as well as Jain Irrigation, which we just discussed with our technical experts, because they're nearing the 80% mark for tomorrow's trade. And if you look at the total open interest as of yesterday was around that level of 80, 81. And Reliance Communication is pretty active in today's session, Neeraj. It's up 4%.
So that could, okay, fine. So watch out for these 3 names. They could come out of the F&O ban. Now, before we go to Sachin Shah, let's cut across to Mahindra and Mahindra as they are speaking on the numbers.
After 7 years, the tractor industry grew by 22% almost, which is the highest growth in 8 years for tractor industry, taking the industry volume to more than 7 lakh tractors, which is 10% higher than the previous high of FY14. The growth drivers, as we all know, were overall economic growth that we had in a country, 2 consecutive years of good monsoon, 4 good harvests, government focus on development of rural and agri sectors, sustained investment in infrastructure and availability of affordable finance. The GST, which was something that we were not sure of how it's going to turn out, actually turned out quite well. It was a smooth transition for Mahindra, and I believe that both for the auto and tractor industry, it was a positive thing. Post GST, the industries have done well. If I summarize M&M performance within this scope of industry performance, I was looking for what's the best way to summarize in one sentence our Q4 performance. And I decided the best way to put it will be that M&M had the best quarter ever last year in F18 Q4. Now, you may find some flaws here and there and say, what about this, what about that? You can leave that out. But overall, I would say that we had the best quarter ever. And why I say that is that the auto sector grew by 20%, which is the highest ever volume growth in 21 quarters for auto sector. The farm sector, the farm equipment sector tractor grew by 40% in the quarter, which is the highest ever growth in 31 quarters for tractors. Highest ever revenue, highest ever profit for both the sectors. And for the year, financial year 18, the auto domestic growth was 10.8%, which is highest growth since FY13. Tractor grew at 22%, which was second highest growth since FY10. And for M&M and MVML, highest ever margin since financial year 11. M&M for the first time crossed 1 billion profit before tax, and Mahindra Group as a whole, globally, for the first time crossed 1 million sales of vehicles and tractors combined. So as you can see that overall, it was a year very well managed within industry that also did very well, both auto and tractor, because of all the positive external environment that we had. While we have managed FY18 quite well, we also have done a lot of work during this year to prepare ourselves for future. A few of the things which we have talked about in the past, and therefore I won't go into any detail: launch of Roxor in USA, launch of Automobile Pininfarina in Rome, global expansion for the farm equipment sector with all the M&As that we have done and organic growth that we have put in place, launch of the new brand Trackstar through our joint venture with Government of Gujarat, launch of Rexton and Rexton Sports in Korea, and expansion of the EV industry where Mahindra has a pole position. So with that, I'm going to request my colleague Rajan to come in and talk about the details, the insights of what led to this performance in auto sector. And after that, Rajesh will do the same for farm equipment sector, followed by Parthasarathy. Then I'll come back and talk a little bit about how we see FY19. Rajan?
Okay, and we'll of course get you snippets of what M&M has to say about the other sectors as well, and then Mr. Parthasarathy will speak about how M&M has done for the quarter at large, but we already know what M&M has done. Okay, some news bits on the screen. CBI has booked Group CEO of AirAsia, Tony Fernandes and others. I don't know for what reason, just trying to read that out. Booked for alleged violation of norms in getting international flying licenses. That is, well, interesting. This is an important piece of news. I'm sure at some point of time, Sajid or somebody else will come in and talk about this. But yeah, the Group CEO of AirAsia, Tony Fernandes and others have been booked. However, last 15 minutes of trade left. Let's focus on trade for a bit. Sachin Shah of Emkay joins in as well. It's been a very hectic day, Sachin. Apologies, couldn't come to you until now. We'll talk about a bunch of things. Start off with this big surge that we're seeing on the 52-week high list and the convergence towards the consumption names. Pidilite, Avenue Supermarts, Britannia, Radico Khaitan today. Anything and everything related to consumption. All forms, all kinds of products seem to be finding favor, and everything which is at 52-week high is trading at premium valuations as well.
Yes, you're right actually. So, what we have seen, in this quarterly result season, the one clearly the emerging trend has been that the spending in the rural area has actually come back. The aggregate demand from the rural area has been very, very strong. And it's almost after good 18-24 months that we have seen that demand actually come back. And obviously the first benefit of that demand goes to the consumer products. That is what we have actually seen always. And particularly when you have in a scenario where you have high oil prices, high rupee depreciation and those kind of things, consumers are definitely one of the better bets. They are also considered as fairly good defensives. And now we are also seeing volume growth coming back over there, which means the earnings should be decent for the next 6 to 9 months. I guess that is how the markets are actually trying to, investors are really looking to park their money over there.
So can I ask you, Sachin, in light of this and the other factors, why is it that you've been gradual in your investments over the last 6 to 9 odd months? Were you fearing some bit of pullback of the other pockets which are not hitting highs and a divergence in the mid-cap space?
Well, clearly if you go to see in the last, say about sometime in the month of from October, November, December till almost January, February, the markets were running too much ahead of time. There was so much of froth in terms of valuations, and particularly in the mid cap and the small cap space. You had a lot of retail money flowing into domestic mutual funds, and they were all largely flowing into the mid cap and the small cap schemes. So obviously the fund managers over there had to deploy all that money into the mid cap and the small cap stocks. So valuations were definitely going out of sync. We could also see that the macros are not really looking very, very strong, because there were clear signs of bond yields globally going up, and which in turn typically leads to derating, or I would say some bit of valuation froth going out of the equities, which was also expected. So from that perspective, we have been very, very gradual and very, very selective, very, very slow in investing money, particularly in the mid cap and the small cap space. And it actually that has fared very well for us, because now is the time when we are actually getting so much of opportunities and so much of choices available at this point in time to look at so many businesses which are probably now available at much more reasonable valuations. And if the earnings growth actually in some of these businesses come back, then probably it makes a lot of sense to invest at this point in time as compared to when they were 30-40% expensive just about 4 months back.
So we'll talk about some of these. Stay on. But it's very close to market close, 18 minutes or 12 minutes left. Let's try and get some closing strategies, and before that, let's try and tell you what dealing rooms are recommending in the session today. Then we'll get back to the conversation with Sachin as well. But Darshan, let's first get a sense of what dealing rooms are recommending in the session today.
Yeah, so one of the stocks that's been actively spoken about is Jubilant Foodworks. The counter is down almost 6%. The buzz in the market is there is a potential of a big block deal that can happen. What we also heard was that the promoters are looking to spare off some stake in the company, and that's something that's been spoken about. So the promoters could be active sellers in the company. Again, Bajaj Finserv, some of the HNIs are actively booking profit in the counter. The counter did manage to rally significantly after the numbers. A little bit of profit booking is something that's been seen in Bajaj Finserv. And finally, if you're looking at Aurobindo Pharma, the counter is down 4%. Weak numbers, weak management commentary also. So dealers believe that profit booking probably will continue on the counter over the next few days.
Okay, thanks for putting that into perspective, Darshan. That's interesting out there. In fact, let's get in closing strategies. Before that, Aurobindo is looking so wobbly. Sacchitanand, any thoughts here on Aurobindo before we get into closing strategies?
Well, I think the stock is still under pressure. In fact, on the higher side, 600, 610 has been consistent resistance for the stock. The overall trend has been weak. So one needs to really wait it out. Probably the stock may still see further consolidation on an immediate basis. But I think weakness from here on could only unfold once 560 is breached on the lower side. So I think the stock could just oscillate within this range of 610 on the higher side and 560 on the lower side. From a closing perspective, M&M, the results have been appreciated well. I think the stock has managed to surpass its previous day's high, and clearly the momentum looks very strong. A BTST candidate 865 should be the stop loss, and I think the stock could see an extension towards 890.
Okay, that's the view coming in there for M&M. It's a buy at current levels, but let's get going and get you some closing strategies from our technical experts. Amar, I'll come to you. Any BTST or STBT for tomorrow's trade?
Yeah, there's one stock that looks good for BTST, that is Biocon. If you look at it, Biocon technically on the charts, even on the long-term charts, it's very strong and the uptrend remains intact. And also looking at the 30th April high of 677, that is taken out today. Technically on the short-term charts also, it's looking quite positive. So any pullback towards 670, 72, that can be used as a buying opportunity with a stop loss of 648 on the downside and a target of 709 on the upside.
Buy on Biocon. Sacchitanand, any closing strategy from your end?
The one which we have discussed is M&M that I am liking, and the other one which is looking really good is again from the liquor space. If you look at UBL, the stock is currently placed somewhere close to 1190. The recovery is very, very good. On the lower side, a stop loss can be placed around 1165, and positional longs can be initiated for a swing to be revisited around 1270. So from a short-term perspective, a very good reward to this opportunity and with the momentum.
Okay, United Breweries and M&M. Both of you, Amar as well as Sacchitanand, thanks a lot for joining us today and taking us through the technical views on the markets. And as we speak, 0.5% lower for Nifty. Bank Nifty is the one which has been underperforming. But Sachin, you mentioned there are a lot of stocks in the broader markets which you have not bought currently. But if I compare the performance of broader markets with the frontline indices, they've corrected sharply on YTD basis. Is there anything specific, any theme or any individual stock that you're looking now where valuations look appealing?
So clearly, in some of the sectors that we really like at this point in time are auto sector, particularly companies which are more rural facing. We believe that the rural aggregate demand has actually come back quite well. That's clearly been one of the emerging trends that we can see from the current result season. So the consumer discretionary expenditure from the rural side should help the automobile companies which are really rural facing. That's one thing. Second, we also believe, in the pharma space, we really like the CRAM space, the contract research and manufacturing space. We believe that is one theme which is actually playing out very well with the challenges with the Chinese, government I would say, enforcement of their pollution norms and all of those things. So the Indian companies actually have a very big chance of opportunity to actually raise their capacities and grow their volumes in the next few years. That's the second space that we really like. The third space that we really like is also the travel and tourism. We believe that the consumer spending on the travel and on their on the travel budgets is actually increasing year on year significantly, and even more wider number of people are actually getting into that net. So that should be another space that can be actually looked at. So these are some of the sectors that we really believe can actually do well in the next few years.
Okay, so once again the bet is on the rural theme, which majority of the market participants have been having. I just want to pull up the European markets. If we could just pull up CAC, DAX and FTSE. There's a sharp correction that has come in for all the three indices as we speak. 1.5% lower for CAC, DAX also down. Remember, there's that fear that there could be snap elections in Italy once again, which is creating that fear, and that could also be a referendum on the currency euro. Hence the sharp decline that you're seeing on the screen. Sachin, in terms of the earnings so far that have come for the fourth quarter, everybody was expecting a great recovery for the last quarter of FY18. What have you made of it, and is there anything that surprised you positively this time around?
So, as I mentioned that clearly the rural demand has come back. That has been one good thing. Second point is that I don't think there has been any major disappointment in most of the results. But yes, we have seen some bit of manufacturing inflation playing into the results. So we know that for the last 6 to 9 months, we've seen the commodity prices actually going up, particularly the metal prices. And that seems to have definitely affected some bit of, I would say margins of some of the consumers of this, companies. So clearly manufacturing inflation has started hitting some bit of at the bottom line of some of the companies. So that is something to be really watched out, because how many companies can actually pass through this in the next 2 quarters and actually get their pricing premium or their pricing power is actually will actually get clearly seen in the next 2 quarters or so.
Okay, stay on with us, Sachin, as we approach the market closing. Pull up Adani Enterprises. That's seen a cut of almost 5% in trade, and I guess it's at day's low right now, sitting around the levels of 123. HCL Tech is up in trade. So finally, actually some bounce back from the IT pack, which saw some profit booking in yesterday's trading session, and result reaction from the likes of BHEL, which is up, and UBL, which we discussed during the show. That's at 1200 right now, sitting with gains of 4%. That's United Breweries. But 3 minutes to go for markets to close. Let's head across to Neeraj Shah to find out how exactly today's closing is panning out. And Neeraj, some breather after the gains that one had seen in the last 3 trading sessions. It looks like a bout of profit booking ahead of expiry.
Yeah, I don't think if there is any other way to term this kind of a move. Some bit of profit booking. The Nifty Bank leading the charge. Mind the mid caps and the small caps haven't fallen as badly, and which is why the market breadth is not looking terrible. About 0.25% a piece, maybe 1/3% for the mid caps. So this is not really bad a day for the broader end of the spectrum, and 0.5% for the Nifty again is not a really bad outcome. Let's take stock of what's happening with the mid caps and the small caps. Navneet will bring up the broader markets, but let me at least start off with what's happening at the large cap arena. And Mahindra & Mahindra post the numbers. Remember, it's been a buy call by a couple of our experts as well. Post numbers to a closing strategy. That stock is up about 3%. IT's had a bit of a bounce back today, and OMCs continue to rise. So HP, BP, IOC, all three of them are having a fairly decent outing in the session today. What's not doing well? Banks. And there's only one word out there. Banks have corrected. ICICI Bank 3%, SBI about 3%. From the financial space, Bajaj Finserv down about a couple of percentage points. Yes Bank down about a couple of percentage points. IndusInd Bank right at the bottom, down about 1.7%. So it's predominantly the banking space which is looking very, very wobbly. and therefore putting pressure on the benchmark indices. Mind you, the PSU banking index has corrected almost 3% in trade, and maybe some of those stocks would feature in Navneet's list. But Navneet, enough excitement beyond banks as well at the broader end of the spectrum.
That's right, Neeraj. The broader markets outperformed the frontline indices today, and there were a lot of gainers, some on back of earnings, and some saw some buying momentum. Nitco was the one which turned profitable for FY18. In fact, the company posted a profit figure of 184 for the full financial year. That was up 11% in trade. Uflex is the other one where it went up on back of numbers, though the bottom line was lower because of higher depreciation that the company incurred, or rather showed in their P&L account for commissioning of a new plant. Excel Crop Care was down yesterday post the numbers, but today it's bounced back, so that's closing with gains of 8%. BHEL went up on back of strong operational performance that was posted, so 5% higher, though it was off the day's high. United Breweries and United Spirits from the liquor pack were up and about. United Breweries closing almost at day's high levels with gains of nearly 4%, and United Spirits too, where the numbers this time around were good, was up 3% in trade. Kaveri Seed, that was up for fourth straight trading session today. Discounters gained nearly 13 to 14% in last 4 trading sessions, so watch out for this. On the losing side, earnings reaction from Aurobindo Pharma, which was down on back of disappointing set of numbers. Siemens was the other one where some bit of selling pressure was seen. That was down 3.5%, in fact closing at day's low. Jubilant Food Works, some profit booking seen for this one as the stock's been moving higher. This too closed around the day's low mark with cuts of 6%. M&M Financial once again was down. Godfrey Phillip posted its numbers where both top line, bottom line for the quarter was lower, and Bank of India, as Neeraj was highlighting, the entire banking pack was weak today, and from the PSU banking lot, that was the top loser with 6% cut, Neeraj.
Well, so that's the picture at close. Not the best of trading days, but it's okay. We've had 3 strong days, so we could have we can do with such a day today. Bring up the market breadth firstly. Okay, the Nifty 50 down 0.5%. The market breadth or the advanced decline ratio will come up on your screen in favor of the declines, but marginal at that. As you can see, the gap widened a bit, but then narrowed down too. So nothing too untoward. Almost 1:1, maybe slightly over in favor of the decline. So that's okay. But the turnover is interesting. Yesterday we did about 7 lakh crores on the FNO side. Today about 10 lakh crores. The cash market is okay, Navneet. Yeah. Even that's picked up a bit, but the FNO turnover, expiry week yes, but still fairly impressive turnover.
Yes, and it's expected during the expiry week that the turnover will be on the higher side. So 10 lakh, but just 2 days before the expiry is a little bit on the higher side, yeah. Definitely. So
fair bit of activity at this end as well. And the contributors list, I would reckon that banks it would be, and financials rather, on one end. I think day before yesterday it was IT on this end completely, or maybe yesterday, I don't remember which. And today it's all financials moving up as a bucket, and IT is on the other side.
Yeah, it could be a sign of profit booking, Neeraj, because for the series as well, the banking stocks have gone up. Bank Nifty has been outperforming. So just before the expiry, maybe there is some positions being closed there.
Yeah, interesting. But banks, it is, and the HDFC Twins feature right up there in terms of the top contributors today, overpowering the gainers by a wide margin, at least on the benchmark indices. Okay, that's the market picture at close. Final thoughts from our expert. And Sachin, what would you be doing with these 2 large spaces? One is banks, but the other one is IT, which is right now caught in a bit of volatility courtesy what's happening to the currency. Whether or not it materially impacts the financials or no, but the market would want to believe that there would be some correlation, and thereby the ups and downs based on what the rupee does almost every single day.
Sure. So clearly, IT services do benefit from the rupee depreciation, and that's been an historical trend, and that has always helped the IT services as per se. But of course, the other good thing is that the results were also not so bad. Valuations have now also kind of caught up, as they were extremely cheap maybe a couple of quarters back. But my sense is that even at this point in time, I guess the visibility in terms of the volume growth is not more than the high single digits, and which is where I believe that's why probably the upside is fairly capped as far as the large part of the IT companies is concerned at this point in time. That's my view at this point in time. On your second question, as far as the banking financial services, so clearly there we will have to place our bets very selectively. The companies which have the wherewithal to actually take care of the volatility in the bond markets, companies which will have the strong franchisee value in terms of going and reaching out to the customers, because it is definitely getting very competitive on that side too, and companies which can actually maintain their margins with their overall operating cost under control are going to be the winners in the next 2-3 years. So it's definitely not going to be like the last 2-3 years where everybody was a winner in the BFSI space. I think it's clearly going to be companies which have the efficiency and the size to actually take things to the next level, and the franchisee value, which will actually play out in the next 12 to 18 months or maybe the next 12 to 24 months in a big way. So we are going to have some very big winners and big losers in that space, and that's why I believe that one will have to be very, very selective and picky, placing their bets in that sector from here on.
Okay. Sachin, we'll leave it at that. Many thanks for joining in today and giving us your perspective. Really appreciate your time. Apologies, couldn't come to you earlier in the segment, but lots of breaking news, so I had to handle some of those. But thanks so much for joining in today. That's the view from Sachin Shah of Emkay. By the way, just before we wrap up the show, the Fortis Healthcare news, the board has decided to initiate the fresh bidding process, a formal announcement of sorts. The new bids will be submitted or to be submitted by June 14. Doesn't come as a surprise at all. But it's a wrap on this leg of Countdown. Thanks so much for watching from Navneet and me and the team that put this show together. But stay tuned to Bloomberg Quint Live, because we'll wrap up the day's trading session for you on Bloomberg Quint's Market Wrap.